To Sir Abel Nicolaou, and to our dearest blockmates, good day. Presenting to you right at this moment is the topic concerning the Expenditure Cycle Part 1, Purchases and Cash Disbursement Procedure. First of all, let us go back on the basic definition of purchases and cash disbursement. So, as we all know, purchases are the costs of buying inventory or goods during a period, aiming for resale in the ordinary course of business. And the latter simply means a payment made by one party to another. Prior to the overview of purchases and cash disbursement activities under the conceptual system, it must be noted that the very objective of the expenditure cycle is to convert the organization's cash into physical materials and the human resources it needs to conduct a business. So now, taking you to the conceptual system of the expenditure cycle, the system intends to be technology neutral, meaning the tasks that will be discussed in this section may be performed manually or by computer. Being said, our focus here is on what conceptually needs to be done, not how physically it is accomplished.
Let us get started with the purchasing process procedures. Purchasing process procedure applies to both manufacturing and retailing firms. However, the difference lies on how purchases are authorized. Purchase procedure includes the task in identifying inventory needs, placing the order, receiving the inventory, and recognizing the liability. Presented in your screen is how the process goes, starting with the monitoring inventory, preparing purchases order, receiving goods, updating the inventory records, setting up accounts payable, and post to the general ledger. Starting with the monitor inventory records, firms deplete their inventories by transferring raw materials into the production process, the conversion cycle, and by selling finished goods to customers, the revenue cycle. Our illustration assumes that latter case, in which inventory control monitors and records finished goods inventory levels. When inventory dropped to a predetermined record point, a purchase requisition is prepared and sent to the Prepare Purchase Order function to initiate the purchase process. Next step is the Prepare Purchase Order. This function receives the purchase requisitions, which are sorted by vendor if necessary. A purchase order is prepared for each vendor. A copy of the PO is sent to the vendor. In addition, a copy is sent to the Setup Accounts Payable function for filing temporarily in the AP pending file, and a blind copy is sent to the Receive Goods function, where it is held until the inventories arrive. The last copy is filed in the open or closed purchase order file. The next event in the expenditure cycle is the receipt of the inventory. Goods arriving from the vendor are reconciled with a blind copy of the PO. The blind copy contains no quantity or price information about the product being received. Its purpose is to force the receiving clerk to count and inspect inventories prior to completing the receiving report. Because if receiving clerks are only provided quantity information, they may be tempted to accept deliveries on the basis of this information alone, rather than verifying the quantity and condition of the goods. Shipments that are short or contain damage or incorrect items must be detected before the firm accepts and places the goods in inventory. Thus, the blind copy is an important device in reducing this exposure. Upon completion of the physical count and inspection, the receiving clerk prepares a receiving report stating the quantity and condition of the inventories. After which, we update inventory records. Depending on the inventory valuation method in place, the inventory control procedures may vary somewhat among firms. Organizations that use a standard cost system carry their inventories at a predetermined standard value, regardless of the price actually paid to the vendor. Posting to a standard cost inventory ledger requires only information about the quantities received. Because the receiving report contains quantity information, it serves this purpose. Updating an actual cost inventory ledger requires additional financial information, such as a copy of the supplier's invoice when it arrives. After that, we set up accounts payable. Its function has received and temporarily filed copies of the PO and receiving report. The organization has received inventories from the vendor and has incurred an obligation to pay for the goods. At this point in the process, the firm has not received the supplier's invoice containing the financial information needed to record the transaction. Thus, the firm will defer recording or recognizing the liability until the invoice arrives. This situation creates a slight lag in the recording process, during which the firm's liability are technically understated. To close the books, the accountant will need to estimate the value of the obligation until the invoice arrives. If the estimate is materially incorrect, an adjusting entry must be made to correct the error. When the invoice arrives, the AP clerk reconciles the financial information with the receiving report and PO in the pending file. This is called a three-way match, which verifies that what was ordered was received and is fairly priced. Once the reconciliation is complete, the transaction is recorded in the purchases journal and posted to the supplier's account in the AP subsidiary ledger. After recording the liability, the AP clerk transfers all source documents, which include the purchase order, receiving report, and invoice, to the open AP file. Finally, the AP clerk summarizes the entries in the purchase journal for the period or batch and prepare a journal voucher for the general ledger function. Moreover, rather than using the AP procedures previously described, many firms use a vouchers payable system. Under this system, the AP department uses cash disbursement vouchers and maintains a voucher register. After the AP clerk performs a three-way match, he or she prepares a cash disbursement voucher to approve payment. Each voucher is recorded in the voucher register. The voucher register reflects the AP liability of the firm. The AP clerk files the cash disbursement voucher along with the supporting source documents in the vouchers file. This file is equivalent to the open AP file discussed earlier and also is organized by due date. Lastly, post to general ledger. The general ledger function receives a journal voucher from the AP department and an account summary from inventory control. The general ledger function posts from the journal voucher to the inventory and AP control account and reconciles the inventory control account and the inventory subsidiary summary. The approved journal vouchers are then posted to the journal voucher file. With this step, the purchases phase of the expenditure cycle is completed.
Now that the purchasing process procedures have been discussed, let us proceed to discussing the cash disbursement systems. So this is a system that processes the payment of obligations created in the purchases system. The principal objective of the cash disbursement system is to ensure that only valid creditors receive payment and that amounts paid are timely and correct. There are 4 processes involved in the system: identify liabilities due, prepare cash disbursements, update accounts payable record, and post to general ledger. The cash disbursements process begins in the accounts payable department through identifying the items or liabilities that have come due. The accounts payable function reviews the open AP file or the vouchers payable for such items or liabilities. Then, the function sends a payment approval in the form of a voucher packet to the cash disbursements department. Next, the cash disbursements clerk receives the voucher packet and reviews the documents for completeness and clerical accuracy. For each disbursement, the clerk prepares a check and records the check number, amount of money, voucher number, and other pertinent data in the check register, which is also called the Cash Disbursements Journal. Next, upon receipt of the voucher packet, the AP clerk removes the liability by debiting the accounts payable subsidiary account or by recording the check number and payment date in the voucher register. The voucher packet is filed in the closed voucher file and an account summary is prepared and sent to the general ledger function. Lastly, the general ledger function receives the journal voucher from cash disbursements and the account summary from accounts payable. The voucher shows the total reduction in the firm's obligations and cash as a result of payment to suppliers. These numbers are reconciled with the accounts payable summary and the accounts payable control and cash accounts in the general ledger are updated accordingly. Then the approved journal voucher is then filed. And that concludes the cash disbursements procedures.
So let us now proceed to physical systems. The physical system is made up of two systems, manual and cash disbursement. A continuum is also created by the combination of possible technological or human possibilities. This course starts with a study of manual methods before moving on to other types of computer-based systems. To further explain, at one end are minimal technology systems that rely heavily on human involvement and manual procedures. At the other end of the continuum are advanced technology systems which replace human activity with automated processes. Systems at different points on the continuum operate differently and present different internal control issues.
Basic Technology Expenditure Cycle. The following is the flow for the Basic Technology Purchases Processing System or manual system. First is the inventory control. When inventories drop to a predetermined reorder point, the clerk prepares a purchase requisition. The inventory control is segregated from purchasing department, and purchase requisition copies will be sent to the purchasing department and open purchasing requisition file. Next is the purchasing department. The purchasing department receives the purchase requisitions, sorts them by vendor, and prepares a multi-part PO for each vendor. And then, the receiving department. Goods arriving from the vendor are reconciled with the blind copy of the PO. Next, the AP department. When the invoice arrives, the AP clerk reconciles the financial information with the documents in the pending file, records the transaction in the purchases journal, and posts it to the supplier's account in the AP subsidiary ledger or voucher register. After recording the liability, the AP clerk transfers the source documents, the PO, receiving report, and invoice to the Open Vouchers Payable or APOK file. Lastly, the General Ledger Department. The General Ledger Department receives a journal voucher from the AP department and an account summary from inventory control. The General Ledger clerk reconciles these and posts to the inventory and AP control accounts. With this step, the purchases phase of the expenditure cycle is completed. Basic Technology Cash Disbursement System, or simply the Cash Disbursement System. Here is the flow for the Cash Disbursement System. We start with the AP department. The AP clerk reviews the open vouchers payable, or AP file for items due and sends the vouchers and supporting documents to the Cash Disbursement Department. Next is the Cash Disbursement Department. The Cash Disbursement Clerk receives the voucher packets and reviews the documents for completeness and clerical accuracy. For each disbursement, the clerk prepares a three-part check. Then we go to the AP department again. Upon receipt of the voucher packet, the AP clerk removes the liability by recording the check number in the voucher register and filing the voucher packet in the closed voucher file. Finally, the clerk sends an AP summary to the General Ledger Department. So last but not the least, the General Ledger Department. Based on the journal voucher from cash disbursements and the account summary from AP, the General Ledger clerk posts to the General Ledger, control accounts, and files the documents. This concludes the cash disbursements procedures.
Next is Advanced Technology Expenditure Cycle. So let us define first what is advanced technology. Advanced technology is a change in the production or delivery of a product or service that minimizes the amount of resources required for production or delivery. The purpose of advanced technologies in AIS is to integrate accounting and other business functions through a common information system. Integration improves operational performance and reduces costs by eliminating non-value-added tasks. Furthermore, advanced technologies significantly alter and simplify the expenditure cycle. It also controls automated purchase approval, automated three-way match and payment approval, multi-level security, automated posting to subsidiary and general ledger accounts.
So next is the Integrated Purchases Processing System. Under this, the level of departmental activity is significantly lower than the basic technology system. Knowing that computer programs perform various clerical tasks, it incurs lesser cost and much accurate data. Thus, presenting to you right now is the flowchart of Integrated Purchases Processing System, where it is composed of the computer operation, which is oftentimes the IT department is tasked for these matter. It is where necessary inputs are done through utilization of computers for instant works. This process is also highlighted knowing that the Integrated Purchases Processing System promotes automation in the spending management system. Next is the Purchasing Department, where it is a part of the integrated system that fully automates the goods and services purchasing process of the business. The Receiving Department, on the other hand, is tasked with determining whether the purchases from the vendor is acceptable and conforms to the purchase order. The Accounts Payable Department is a department where the accounts payable clerk is tasked in receiving the supplier's invoice, the basis and recording the previously placed accounts payable pending file, and lastly, we have the General Ledger Department, where it performs on the reviewing of the General Ledger upon making the General Ledger report during the transactions and operations of the business.
An integrated cash disbursement system consists of making payments to hard copy checks that are then mailed to the vendor. Other procedures are used for those that use electronic fund transfer for payments. It first starts in the computer operations as the vendor invoice is received and processed in the cash disbursement system. Here, it searches for the items due and sends the payment details to the check register and the check to the vendor. Check copies are then sent to the Accounts Payable Department and the Cash Disbursement Department for view. It is then posted in the General Ledger, while management reports from the Accounts Payable Department and Cash Disbursement Department are submitted in a file.
Expenditure cycle risk and internal controls. These are the possible risks that may occur throughout the expenditure cycle. First, risk of unauthorized inventory purchases. Second, risk of receiving incorrect items, quantities, or damaged goods. Third, risk of inaccurately recording transactions in journals and ledgers. Fourth, risk of misappropriation of cash in inventory. Fifth, risk of unauthorized access to accounting records and reports. To mitigate and mend those enumerated risks, these are the following internal controls organizations can take to act upon them. Transaction Authorization. Purchases Subsystem. The inventory control function continually monitors inventory levels. As inventory levels drop to their predetermined reorder points, inventory control formally authorizes replenishment with a purchase requisition. Cash Disbursements Subsystem. The AP function authorizes cash disbursements via the cash disbursement voucher. To provide effective control over the flow of cash from the firm, the cash disbursements function should not write checks without this explicit authorization. A cash disbursements journal or check register containing the voucher number of authorizing each check provides an audit trail for verifying the authenticity of each check written. Segregation of duties. Segregation of inventory control from the warehouse. Within the purchases subsystem, the primary physical asset is inventory. Inventory control keeps the detailed records of the asset, while the warehouse has custody. At any point, an auditor should be able to reconcile inventory records to the physical inventory. Segregation of the general ledger and accounts payable from cash disbursements. The asset subject to exposure in the cash disbursement subsystem is cash. The records controlling this asset are the AP subsidiary ledger and the cash account in the general ledger. An individual with the combined responsibilities of writing checks, posting to the cash amount, and maintaining AP could perpetrate fraud against the firm. Supervision. In the expenditure cycle, the receiving department is the area that most benefits from supervision. Large quantities of valuable assets flow through this area on their way to the warehouse. Close supervision here reduces the chances of two types of exposure. 1. Failure to properly inspect the assets, and 2. The theft of assets. Inspection of assets. Inspecting and counting the items received protect the firm from incomplete orders and damaged goods. Supervision is critical at this point to ensure that the clerks properly carry out these important duties. A packing slip containing quantity information that could be used to circumvent the inspection process often accompanies incoming goods. Theft of assets. Receiving departments are sometimes hectic and cluttered during busy periods. In this environment, incoming inventories are exposed to theft until they are securely placed in the warehouse. Improper inspection procedures coupled with inadequate supervision can create a situation that is conducive to the theft of inventories in transit. Accounting records. The control objective of accounting records is to maintain an audit trail adequate for tracing a transaction from its source document to the financial statements. The expenditure cycle employs the following accounting records: AP subsidiary ledger, voucher register, check register, and general ledger. The auditor's concern in the expenditure cycle is that obligations may be materially understated on financial statements because of unrecorded transactions. This is a normal occurrence at year-end closing simply because some supplier invoices do not arrive in time to record the liabilities. Access controls. Direct access. The expenditure cycle a firm must control access to physical assets such as cash and inventory. These control concerns are essentially the same as in the revenue cycle. Direct access controls include locks, alarms, and restricted access to areas that contain inventories and cash. Indirect access. A firm must limit access to documents that control its physical assets. For example, an individual with access to purchase requisitions, purchase orders, and receiving reports has the ingredients to construct a fraudulent purchase transaction. With the proper supporting documents, a fraudulent transaction can be made to look legitimate to the system and could be paid. Independent verification. Independent verification by accounts payable. The AP function plays a vital role in the verification of the work others in this system have done. Copies of key source documents flow into this department for review and comparison. Each document contains unique facts about a purchase transaction which the AP clerk must reconcile before the firm recognizes an obligation. Independent verification by the General Ledger Department. The General Ledger function provides an important independent verification in the system. It receives journal vouchers and summary reports from inventory control, AP, and cash disbursements. From these sources, the General Ledger function verifies that the total obligations recorded equal the total inventories received and that the total reductions in AP equal the total disbursements of cash.
Seldomist Theory Oil Corporation is a gas station located at Ormoc City, Leyte, offering gasoline, diesel, and other petroleum products. It is open 24/7 with a car wash service and convenience store. Their purchase process flow is as follows. A purchase requisition is sent notifying the need for additional inventory. Before sending the purchase order, it is reviewed by the purchasing department. Then after, an application to purchase is first needed with a unique subscription number and identification of the account. Payment is then made online or another medium, to which is then emailed to the vendor. After confirmation of the parcel, the receiving department arranges for hauling services towards the depot to pick up the fuel. After the cargo is being loaded, the purchase order is then closed. The oil depot will then send the sales invoice through email. Once the fuel has been delivered to the station, review of the purchase order and preparation of the receiving report is then made. Inventory is then updated before review and posting to the General Ledger. For cash disbursements, the company only pays on every purchase order, as the oil depot does not accept credit on their account. After receiving the vendor's invoice, the cash disbursement system processes the payment amount. Cash is then sent and recorded to the cash register. The cash disbursement department then reviews the payment before submitting the management report.
So that is all for part 1 of the expenditure cycle, and we hope you were able to understand the purchases and cash disbursement activities and their processes. Lastly, don't forget to subscribe to Sirius YouTube channel, Project Sage. The first one to comment the number of likes in Sir's most recent video or vlog gets a prize. So guys, if you have any questions, feel free to ask us after the presentation. Hope everyone learned a lot, and thank you so much for listening, and God bless. This has been Group 2 signing off.